If you're a business owner and you've ever been hit with a tax bill and you think, oh my gosh, how on earth am I ever going to pay this? Or it's just so much more than you ever expected. Like this video is going to be for you. My name is Will Boyd. I'm the co founder here at CEO Finance Academy. We do fractional CFO services and financial coaching for small business owners. And after being able to see under the hood of over 250 different businesses, we've been able to see a couple of patterns and trends. And this one is, I think, one of the biggest ones we get when people come to us, which is, hey, I'm looking for ways to reduce my tax bill. And we're going to clarify a couple of things here. One, there's a difference between your personal taxes that you owe, and two, in terms of saving for business taxes for you on the personal side. So I'm not a CPA. This is not tax advice. Please go seek out a great CPA if you really want to get into the nitty gritties, especially on your personal side. But I want to share with you what has really helped us, Alex, my business partner, and I, to really never have a tax issue in the last 5, 6 years in running our business. And it's really a proactive strategy that we just find a lot of owners aren't taking the time to sit down and map out. And so, a couple of things that you really want to know here are one, are you actually tracking your end of month numbers and being able to set aside certain amounts of cash for tax savings based on those numbers? And so there's a couple things that matter here. One is, do you actually have accurate books? Or do you have accurate bookkeeping? If you don't have accurate bookkeeping, it's going to be so difficult to know how much you should be setting aside in tax savings from the business to be able to set aside for you personally on the tax side. Now, there's a lot of nuances here and depends on how you pay yourself, whether you're W-2 as an S Corp, whether you're paying yourself differently as a C Corp. So this is going to be a general rule of thumb here that I'm going to talk about that's really made a difference for us. And that is, at the end of every month, we have what we call our wealth waterfall process, which is we look at what's our gross profit from the end of the month before. So let's just say, for example, it's July right now. We won't know until the beginning or early part of August how we did in July in terms of numbers. Now, we track everything to a T, so we really know like August 1st. But for most businesses, if you're working with a bookkeeper, for example, they might not get you your numbers until the 15th. Another thing there, if they can't get you their numbers by the 15th, you really got to look for a different bookkeeper. It is so important that you're getting your numbers on a timely manner so you can make decisions based on the past to then project for the future. So what we do here is in that wealth waterfall process, we look at our gross profit and we are pretty conservative about it. We set aside 25% of our gross profit for tax savings. Now, there's some people out there who go, I never have to pay that much in taxes. Great. Maybe your level of where you want to save for is lower. Maybe you're in a super high income bracket and you're like, and you're not playing wealth strategy games of reducing your personal taxes through, real estate and other things. Then you might want to set your rate higher, right? Initially, we started at 30%. Alex and I have both been able to figure out kind of we live in different states, be able to figure out kind of our personalized, tax savings rate that we need to do for us individually. But that comes from the business from us. So at the end of the month, let's say we'll just use really simple numbers. Let's say there's $100,000 of gross profit. We take $25,000 of cash and we put it into each other's owner's distribution account. And it's set aside and marked as tax savings. And so I put that into tax savings. And what's really helpful about this is if you pay quarterly taxes, one of the things that you'll notice in a lot of times is your quarterly taxes for this current year were based on how you did last year. But let's say this year you're doing significantly better and you've got quite a bit more in profit. If you go under the assumption that your quarterly taxes that you are paying right now this year are going to be accurate and you won't owe anything on top of that, you're going to find out really quick that that's probably not the case. And you're going to owe a lot more because you pay taxes on the profit you make in the year that you are actually operating it. And so in this case, we want to be able to know each month, what are we going to owe at the end of the year? And there's two things that are really important about this. One is we're prepared and we can save that much in tax savings. Number two is if you have that, you know how much you could potentially reinvest back into the business, right? Because if you're going there, you've got end of the year that tax is based on profit. But what you could say is, hey, well, let's say we've saved up at the end of the year $200,000 in tax savings. Well, do we need to invest in anything into the business for next year? Because we can pull from that as a tax write-off to invest in the business. But here's the thing, we're pulling from a number that we know, not from a number that we're we're not sure what that, what we're actually going to owe in taxes. So when we go to make that investment at the end of the year, we're pulling from a number that we know we actually have already pre-saved. So we're not borrowing from Peter to pay Paul, meaning we're not taking from money the next year to be able to pay this back, right? And that's one of the biggest things we see with owners is they get themselves in this pickle where they haven't saved for taxes in that year, into the year, and so or throughout the year, and so they get to November, December, and they're like, "Hey, I'm not prepared for the tax bill. I gotta write off as many things as I possibly can, make as big purchases, make all these decisions, so that way it reduces my tax bill this year." Not realizing that's going to catch up to you the next year, and you can play this cycle for a long time, but eventually it's going to catch up, and you will have the tax bill that you're going to have to pay on profit. And this is again from a business standpoint, and there are ways that you can adjust this on the personal side. I'm not a CPA, and please don't take this as financial advice, but I do think it's really important as a business owner, in the beginning, as you're scaling, like you've got to set aside for the tax savings. And it's so funny, people come and ask us, "Hey, what's your favorite tax strategy? What's the tax hack?" And on the personal side, hey, there's different things you can do, but from a business standpoint, I can't stress just being prepared, right? And knowing your numbers every single month and being able to say, "Hey, this is the profit that I did from the month before. I'm going to owe 20 something percent." Again, it can vary from 15 or 10, as low as 10 if you don't have a certain type of tax, all the way up to 30%, that you're going to want to set aside for tax savings. Like it's going to come due at the end of the year. And it's either you can just ignore it and not face it, or you can set it aside and save for it now and be able to go, okay, well, I can, I'm at least prepared. Should I not reinvest in the business and I not use anything as a write off, I'm at least prepared to pay the tax bill. And this is how we've been able to not stress about taxes for the last 5 6 years that I can remember, after the first year when I did not prepare this way, when we did not set aside tax savings as we were going. And so we got hit with a tax bill that was, I can't remember exactly, but more than $10,000 in excess of what we were thinking. And so we had to play catch up in the next year. And so we had to do even more revenue, more profit to be able to pay back what we didn't save for the year before. And we owed taxes again on that additional profit. And so this is where it just gets so costly if you do not save as you go and be prepared as you're growing to be able to set aside for taxes. So if you've been struggling with this and you're wondering how to get out of this, the very first thing is you got to face it, right? And it sucks and it's hard and it's difficult. And that's kind of why we do what we do, which is to sit there with our clients and not judge them for where they're at, but say, "Hey, the best time to plant a tree was 20 years ago. The second best time is right now." And so you got to face it and you got to look at it and you got to own up to it. Say, "Hey, I haven't taken accountability and responsibility for this piece. I'm going to now, and we're going to start tracking this and we're going to start creating a plan for saving for taxes so I don't get caught in these situations." Again, the personal side, not my area of expertise, and there's great CPAs out there who will cover it. But if you're a business owner, be prepared. And if you need help with that, shoot me a message. Check us out at ceofinanceacademy.com. But more importantly, just be prepared and save as you go.